Let's move on to Costco. People love Costco.
I love Costco. I get my gas at Costco.
I went to Costco yesterday.
Did you?
Yeah.
My gas at Costco is like 50 cents per gallon less.
Come on.
I don't go out of my way to go there, but at the same point, I mean, sometimes I do.
It was 50 cents less than Circle K.
Oh, Circle K is super expensive. Why do you go there?
Can we carry on, boys,
to the
with
house.
Costco? What is the market cap on
It's just
Costco?
that Circle K is super expensive here in Richfield, in Bath. $160 billion. PE, 37. X marks the spot there, guys. That is bad. Profit margin, 2.7%. 4.3 billion and 172. It sounds about right. Still an X.
Still pretty low.
Food business is a very low margin business, guys. Everybody thinks these grocery stores and centers, it's very, very low margin. So just be ready for that one. And a dividend about 0.8%. So we currently have two X's, and a dividend of 0.8% means every year they spend about $1.2 billion on dividends. So when we look at the free cash flow, we want to make sure they make enough to really easily cover this dividend, because not all dividends are safe. Everybody thinks they're safe and they're not. You have to make sure the free cash flow can adequately cover the dividend so you don't ever lose it. Because Mark Cuban wants dividends like crazy. So according to Mark Cuban, guys, this is the company that matters to look at fundamentals.
Pillar number 3 is revenue growth over the past 5 years for Costco, baby.
Revenue growth of the last 5 years. Let's look at this. 118 billion and 167 billion. Chickadee check. You know what I'm gonna say though?
Go on.
One of the most important aspects of this is how much of this was driven by new openings versus same store sales. So one of the things you want to look at on a year-to-year basis is how have their same store sales increased every single year. That's what you want to focus on, because if sales are declining, but they're opening more locations, they can show an increase in sales versus every store declining. So it's important to see what's happening at each store. Same thing as Kohl's, the past one. I don't know how many Kohl's are opening these days, but we'll find out.
Pillar number 4 is profit growth over the past 5 years, Paul.
Profit growth over the last 5 years. 2.35 billion, 4 billion. Check mark there.
Very nice growth. Pillar number 5 is shares outstanding. We want the number of actual shares out there going down.
438 to 442. X.
Uh-oh.
Not a huge jump, 1.5%. So it's not a big deal. For every 100 shares that existed 5 years ago, now there's like 101.5 or so, give or take.
Pillar number 6 is current assets over current liabilities, Paul.
All right, I'm guessing this is in the negative. Food businesses tend to have a negative ratio.
Okay.
So 32 billion in current assets versus 32.7 in current liabilities. Yeah, it's a negative. Barely an X. Barely an X, but it's still an X.
Okay.
Now for the granddaddy of them all.
Free cash flow growth is pillar number 7. This is cash from operations minus capital expenditures.
600 million. 6 billion.
Good Lord.
Wowza. 4.2, 3.8, 3.3.
Good Lord. Give me a second.
So, what is the average, Uncle Seth?
Well, you know, you're standing in front of the numbers. Give me a second. 3300. I'm going to get this wrong. Here we go.
I'm going to do it right now.
3.5, Paul.
3.5.
Yep,
okay.
The average free cash flow growth over the past 5 years is 3.5 billion.
Now, this is the revenue is growing adequately here. The free cash flow is growing adequately. It's a big company, though, so you have to weigh out how established it is, how big it is, et cetera. At 20 times, you're at $70 billion.
Let's step back real quick. Folks, if you're new here, we use our free cash flow as our pillar number 7. Pillar number 8 is we take a multiple of this free cash flow to get a desired market cap we want to pay for this company. In this case, it's 70 billion, Paul, and the actual market cap
is 160
billion. We're way off.
So we're way off. But one thing I want to make note is their dividend is 1.2 billion. They have plenty of money to pay that dividend. It is 70 billion. It was a big jump. So there's 6 billion here. If you just base it on the last, actually, let's go to the trailing 12 months. Let's see how the trailing 12 months looks in terms of their free cash flow. And again, the Everything Money website will only look at the previous. It'll be a much better version than this.
We will be showing the beta version of the Everything Money website here in about 30 some odd minutes. So stay tuned for the greatest single day of your entire life. It's happening right now. Get excited.
So right now, the last 12 months was 6.4 billion, so it's increasing. So Seth, what's 160 divided by 6.4?
25. Yeah, 25.
So right now, the previous 12 months, the ratio is 25 to 1. So it's not far off if you think the free cash flow is still going to go higher and higher from here. And it has been increasing every single year. So this isn't terrible. So the things to look at further in this company is same store sales versus new company, new growth. How are they internationally? Are they out there internationally? Look at Sam's Club.
People are
versus
saying
Costco.
people are saying that they're putting them up. That one opened in China. People are saying they're seeing it internationally. So,
How many stores do they have?
will someone look that up for us while we go over
I think
to?
they have it right here.
Okay, go ahead, Paul.
They have 795 stores worldwide. That's not a lot of stores. I mean, that's not a ton of stores. What does Sam's Club have? I mean, there's a lot of growth potential in this company. So even at this price, could I make a justification? If you're going to plan on holding this thing for a long time, 20 years, as long as they don't increase that share count too much, I believe that they can sit there and still justify close to this price. It doesn't have to fall 30, 40% to justify it, but you got to make sure that the revenue growth and profit and free cash flow growth is still sustainable, and look at what their potential market size is.
Mo is going to pull up the momentum right now. No pun intended, Mo and momentum. Let's look at momentum for Costco.
So since December of this year, we have definitely been in a downward trend, and you can see that reflecting on their stock price. Now, the way I'm looking at this stochastic right now, how it's on the bottom, we are clearly out of the sweet spot, and we're kind of just trickling on the bottom. If this is me playing it, what I'm gonna do is take one tracker share and buy Costco to go long. This could take a month, it could take a day, but when Costco's trend changes, I wanna be in that. And Costco's trend does change quickly. You can see how quickly it goes from negative to a positive, to negative to positive. So this is what I'm gonna do. I'm gonna buy one tracker share on here and hopefully catch it on the way up, but you gotta be patient. Do not start adding until you're in that sweet spot area.
Paul Marcus says there's 600 Sam's Clubs worldwide.
600, that's it?
Yeah, that's what they're saying.
Wow. Okay, so, I mean, I look at 795. Let's say they're all in the US, which they're not.
They're not. Canada.
Say that again.
Definitely
Mo.
Canada.
That's 16
Canada,
or
yeah.
17 per state. That's not a...
Down there for you, 73%.
Oh,
I'm sorry. Say that again, Don.
73% in the United States. So 73%, that's 570. That's 11 or 12 per state. That doesn't seem like a lot.
And it's funny because I think it was in 2018, they said that they wanted to be within 20 miles of every house in the United States.
So what would that, how many locations would that take?
I have no idea. You're the math guy.
Well, it's not about math, just it's also
Well,
about...
think of
Paul's our quant. Just
He's the
look at him.
quant.
He's our
You're the
quant.
computer.
He doesn't even speak English, folks. You know what that's from?
Yeah, of
The
course.
Big Short,
Yeah,
when he
of course.
goes, this is my quant, he doesn't even speak English. And the guy's like, yeah, I speak English. He just likes telling people.
That's right.
Okay, that was our take. That was our take on Costco.
Listen, I'm not opposed to Costco. I do think that you should watch the stock as a good stock to own if it pulls back quite a bit. Go ahead, Mo.
Another great thing about Costco is
Hold on, say that again, Mo. I'm sorry.
another great thing about Costco is they pay that special dividend every 3-4 years. In 2020 they paid a really big dividend. It was almost $10 per share to shareholders as just like a thank you. I know they did another one in 2018, so that's another benefit of being in a stock like Costco. So if we can get this at a low enough price based on value, that would be great.